Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stone with tonight's Deep Dive. It is August 6, 2018. Thought I'd take a look at the S&P 500, the SPY here, just because there's some interesting things that are sort of cropping up here. First, we're in a trading range with the low volatility as far as our energy level, which I'll point out here in a second. But we have all of the trends, short, intermediate, and long term, all pointing to the upside. Technical is pointing to the upside, but here is something that is looming out there with the seasonal accuracy. So this is sort of a forewarning of what could be happening. Let's go ahead and take a look at the market as a whole and really get a feel for what's taking place here. I'm going to scrunch this up a little bit and you'll get a better perspective. You see way over here, this is today's action, and you can see that the closing bar closed above this slight resistance level right through here. Now it's slight, it's not super strong, but it's kind of sets the stage here. And the resistance level at this spot right here is 28.46 3/4. That's important because the closing price was at 28.50, so it's barely above it, but it is technically above that particular threshold. So under normal conditions, we would say, okay, if we're breaking above a threshold, a resistance level in this case, what's the next level? So let me go ahead and just expand this just a little bit. Go the opposite direction to really get a feel for just how strong this is. This is a 50 versus a 7. 7 is relatively minor and is not necessarily a really strong resistance to the market, but a 50 is a different story. So if the market's headed higher, we'd be looking at obviously new highs here as far as early part of the year, and that particular level, at least our resistance level, is at 28.84 1/4. So we do have upside potential to the market, but here is the inevitable but. The seasonal tendencies to the market are telling us something that's a little bit different, and they're kind of looming out there. So here's the S&P 500. You can see that the seasonal tendencies as far as all the markets we track, and there's 40 of them, that we're looking at S&P being in the top 10, and obviously number 3 on this list as far as the seasonal strength to the market. So let's go ahead and take a look at the market as a whole, really get a feel here. The 5s and the 10s are going to be pretty similar, so I'm just going to stick here with the 5-year chart. The blue line represents the 5-year tendencies to the market, and the black line represents the current year. The shaded area tells us the market has been accurately tracking the seasonal tendencies. So for those of you that are subscribers, hopefully you've been watching the seasonal tendencies, because this has been going on for quite some time, and it's been a really good roadmap for the market. And so the roadmap for the S&P 500 for right now is it looks to be topping out here into kind of a sideways consolidation into latter part of August, at least the midway through August, and then through the end of August into early September, a little bit of a sell-off. But it's going to pull up the 10 years, and you'll see that the market is essentially doing the exact same thing. 15 years, it's not as dramatic. It's more of a downward trend into early part of September. But nonetheless, when you have this type of condition, I'm harping on the 5 years just because it's a little more pronounced here. It's foreshadowing the fact that the market is likely to find some resistance and is likely to have some type of a reversal. Maybe not right now, but it's coming. And from that standpoint, I'm just going to flip back to the S&P 500. So even if we do look at this and the market does rally up to this upper level here, just remember that that the market could have some difficulty in the latter part of August and certainly going into September. So just keep that in the back of your mind. So what are we doing now to actually trade the market? Well, the systems have a nice open position profit on a per contract basis. Just recently, obviously today, we went long another position, adding to our other longs. So we have 4 long systems that are actually out there right now, each of which has a nice profit. I'm simply foreshadowing the fact that the market could be coming into a period where it could find some legitimate resistance. Now, if it goes all the way up to new highs, then hey, I'm perfectly fine with that. But just realize that that things could be changing, and that the market is likely not to stay in this bullish phase, that we're likely to see some form of a reversal here. So watch your S&P positions carefully. This is not a time to just simply become complacent and just simply be a buy and hold type trader. This is a time where you want to be watching your positions very, very carefully. And if the market starts to reverse course, and that reversal, just flip back to the chart here, that reversal could be a dip below this particular threshold, or any of these other thresholds for that matter. But specifically, the fact that we finally broke above this level that I was quoting before, this 28.46 level, essentially where we are right now in the pricing action. If we should break below that on a closing bar basis, the market could start to go into some form of retracement. So just simply watch this level, watch what the systems are doing. With those systems by themselves, you can see that this is a daily bar system that just triggered today, so it's kind of late to the game here. We've had another one that's been in this particular position for quite some time, and then we have two others, a 90-minute and 120-minute bar systems that are simply been reacting to the markets quite nicely. So if in theory the market does do a bit of an about face, the short-term systems, the 90 and 120-minute bar systems, would liquidate fairly quickly, and then it would be followed theoretically by some short systems helping to hedge our position. But do watch over what is taking place specifically with the S&P systems. Realize that this breakout is good for the longs, obviously, and that the potential has the market headed higher, but it should be short-lived in the fact that the market into the latter part of August, we should see some form of a reversal, at least according to the S&P 500. And the fact, quite honestly, if you just simply look at the seasonal tendencies here, you can see that the seasonal tendencies they're not going to be 100%, but they're pretty darn accurate in tracking and sort of foreshadowing where the market should head. And this has been going on for quite some time. This grayish area simply represents the fact that it has been seasonally accurate all that time. It's probably a good chance that it's going to continue to follow that phase to what the seasonal tendencies are for the coming weeks or so. And if that should be the case, then latter part of August going into September, consolidation, and then perhaps another rally here. But we could view this as a short-term liquidation type phase, and we can always theoretically repurchase positions should we get some type of a sell-off. But as always, we're always going to follow the systems, see how they kind of react to how things are playing out, and then kind of move forward from there. The other thing I'll point out is that I've had a number of people that have been asking for, what's going on with the systems, and they want to have more information. And when I'm able, not always, but when I'm able, if you come to a membership area, come down to the private Twitter phase, and simply give us your first, last, and email address, and if you're on Twitter, what is that information? Then what we would do is you would submit that information. We would send you a Twitter feed. This is for a private Twitter feed, where we would then provide you with some additional information. Not every single trade, not every single market, but to the best of our ability, just can at least give you a better idea as to what's taking place. So if you're interested, you can always look at this information, and then to sort of summarize this, that if you were to come to signals, come down to market commentary, that would then take you to our Twitter feed, that you don't have to have the ability to be on Twitter. For those of you that are not, you would then have the ability to sort of see some of the information we post during the course of the day. But it's important that if you're interested in our private Twitter feed, to the best of our ability, we're going to supply as much information as we possibly can. This is a free service. It's really just to show people what the systems are doing so that they feel comfortable with things, but do feel comfortable in going to membership, private Twitter, and then filling in this information, getting you as much information as we possibly can. So at least give you some insight as to what theoretically is going to be happening with the S&P 500, the fact that we're long, but we're also watching the market very closely for an eventual, what we would think based on the seasonal charts, for some type of reversal. So watch your positions very, very carefully here, and we will talk to you tomorrow with another market. Thanks so much.